Okay guys, we are looking at the Inner Circle Trader Pivot Calculator, and this tool is going to be an asset for individuals that are looking for amplified techniques in terms of trading bias for the day. And basically, over here we have a diagram basically explaining the sell bias range and then the buy zone. Okay, here's essential pivot. So all the numbers above this are your key points to look for selling or sell signals to come into the market. And here's essential pivot, and below all of these figures are used to determine possible buy signals. Now obviously, much like I've already explained before in previous sessions, simply because we are in the sell zone, if we're in a strong bull market, price can come back down to one of these resistance levels. If they've been broken, what's a resistance level become? Support. So bear that in mind, okay, because we can get tripped up thinking that we're going to just sell a resistance level and it may end up becoming a support, providing us another buying opportunity. So putting that aside, okay, when we run pivots, we don't use the opening price, okay, but I have this in a calculator because it's going to give us another concept that I'm going to teach while we're working with this resource here. For pivots, all you need is the high, the low, and the close. Okay, and once you enter those, take the decimal point out, just use the whole numbers, don't write in any decimal. Okay, and what will happen is it'll calculate all of your resistance levels, your midpoint levels, okay, central pivot, and your support lines, and your mid support lines. Okay, for instance, here's a central pivot level. Okay, the midpoint between R1 and central pivot, MR1, this would be right here. There's your mid pivot. R1 to R2, mid pivot right here. R2 to extended range pivot, R3, mid pivot right here. R3 to R4, extended pivot range, mid pivot in here. Okay, and so on for the support levels. Now you're probably asking yourself, what is the 75 and 25? Well, have you ever noticed when the market trades and it never really makes it down to even a midpoint pivot, but it makes a low and then trades up? Well, chances are it's found a 50% level between the mid point MS1 and the central pivot. Right between there is a 50% retracement area where price could come down and find support, and I give you that number also to look for. Now, while they are still minor numbers, you still got to be conscious and aware of where they may be, because it could still give you a trigger or a confluence of events. If it doesn't go down to an S1 or a midpoint MS1, it could very easily find support at a small little fractional pivot range. Now, once we have all of the pivots calculated, you do want to have the opening. Okay, and the way I do my pivots, okay, I'll run new pivots on New York midnight time, and I'll calculate new pivots based on that time frame. Now, I generally use the New York pivots midnight to midnight, but I still am conscious and aware of what the GMT pivots are, because I want to know what the other traders are trying to do. Because if I'm just looking at one set of pivots, my perspective is limited to just that. So because I'm trying to get other people's money from their pockets, I'm better equipped by knowing what their sentiment or expectation is on the market based on their pivots, GMT. It's not that one pivots are better than the other, it's just I used the midnight to midnight New York. If it was before midnight, you certainly can use GMT pivots if you're going to be trading the Asian session, and I would advise doing that. If you're going to trade the New York session, while I do believe the midnight pivots will still be useful all the way around to a new trading day, to be closer to the market, you can recalculate your pivots going into the New York Open, and you'll have a more refined pivot level reference. Okay, so basically, with saying all that, you still want to get the opening. Okay, and when you plot that with these other figures of high, low, and close, what will happen is the range here and the projected range. The projected range is just basically 2 times the range. Okay, so I'm not going to go into detail on how we can use this because it's really minor, but I'll come back to this at another video. But the one I want to highlight is the bias. Okay, whenever you enter these numbers here, if you want to know on a day that's a non-trending day, okay, and this is what this diagram is detailing here. It's the central pivot here, basically here, and all the ranges above it, we're in the sell zone. Here's the central pivot, and all the range below it is in the buy zone. Okay, as you can see here, anything in red above the central pivot, look for sells. Anything below the central pivot in the buy zone, look for buys. Well, what happens is if you don't have a trending day where you can see one of these large range days, generally you have a small range non-trending day. What if I were to tell you there was a 60% likelihood of knowing before the session even opens what the high or low of the day would be at? Now I'm talking the price, not just what time it may come in, because we already discussed in previous videos and tutorials that the high or low of the day is generally made within the first 4 hours after midnight New York Standard Time. So in other words, between midnight and 4 a.m. there's a huge bias to the market making its higher or low for the day during those 4 hours. Okay, now that in itself is outstanding because you can use that to be a really proficient day trader, not just scalping. You can just get in there, position yourself, and then hold for the London close. Well, you could take it one step farther, okay, and use this calculator. And what I'm doing is I'm basically measuring if the open, okay, of this day, if we closed above or below the open. Okay, and what that'll do is it'll give you the MS1 or MR2. Okay, this little window in here. On non-trending days, you're going to have one of two things happen. Based on the open and close relationship, when you plot those in there, it's going to spit out either MS2 as your projected low of the day and MR1 as your projected high of the day. Or it's going to give you, in this case here, MS1 as the low of the day or MR2 as the projected high of the day. Okay? Now, don't let that confuse you because basically it's illustrated here. For instance, with this data here, and I just threw some numbers in here, guys. I'm not using anything in terms of actual data. It's just suggesting that the MS1 is going to be the projected low of the day. MR2, projected high of the day. Now, there's a 60% likelihood of this being accurate by itself. Okay. Now, does it mean that before the London even opens, is it going to go down here, make the low rate at MS1 and trade right back up to MR2, and that's all it's going to do for the day? No. Has it happened before? Yeah, it happens. There's a likelihood of it happening like that. But basically, the way I use it is, if we enter the open on London and we're trading at or near MR2, I'm going to be looking, because we're already in the sell zone, okay, I'm going to look for a sell signal, and if it starts to break down, where am I going to try to take the profit at for that day? MS1. Now, does it mean that we won't trade lower on a large range trending day? No. We don't really know when a large range trending day is because we could have several small range contraction days on a daily basis until we get to these really large range days that happen, okay, when a lot of traders at least suspect it, but we know by the tools that we've covered on previous videos that whenever there's small ranges begot what? we got large range days. Okay, so this is how you trade small range days, okay, and still be able to be profitable and consistent. And just because they're small ranges doesn't mean they're not they're tradable. In fact, they're very predictable because you can know where the high or low is going to be on the day. So basically looking for one of these levels, okay, to create a signal. Now it could be the close of the trade for the day, or it could be the open of the trade of the day. In other words, the setup that the lines portion of the move, it may ensue or begin at the MR2 level, okay, and may conclude at the MS1. Okay, but basically wherever it trades to first, it will, once it gets there, one extreme or the other, it will seek out and try to reach the other. Okay, for instance, if we open up into the London session, into the buy zone, and we get an optimal trade entry at MS1, okay, and we trade higher, where would we reasonably expect price to trade to for the day? Well, MR2. That's where we look to take profit. Okay, why? Why would we want to trade this way? Why wouldn't we want to just hold on to maybe R2 or R3 or whatever? Because we don't know. We have no idea that it's going to be a large range day. And for it to trade from MS1 up to R3, okay, that would be suggesting that there is a large range day. And while we may be trading in line with market flow and COT and all these other factors looking for a bullish move, we can't, with any great deal of certainty, always know when there's going to be a large range day. We can see when the stage is set, but we don't really know for sure if it's going to happen. So this is why we take these small range days, how we trade them this way. Now, does that mean we take everything off at MR2 and just leave the day? No. Remember, we were teaching that you scale off some of the profit, okay, and leave a little bit in there. You leave 10 to 20, even 30% of your original position, and hopefully, if we do get a large range day, you'll be able to capitalize on some of that, okay? And if we have a day that has a close that's lower, let's use a close that's lower than the open. Okay, now look what happens. We get MS2 as a projected low and MR1 as a projected high. Okay, and the same thing applies here, guys. Whatever one it trades to first, it will try to seek out the other range extreme. Okay, so that's this is a pivot calculator you guys can use for your trading. Once you get the numbers, just take them and plot them on your chart, and every day you just move them and adjust them back to what you have here as your output. And this right here is a daily bias concept. It allows you to know with a pretty good likelihood, not 100% guys, don't think I'm going to be able to tell you the high and low every day, but when everything lines up, it has a pretty good track record for calling a high or a low for the day. And when you add that to the equation of looking for the high or low to form in the first 4 hours, it becomes rather mystical to new traders, because what they'll do is they'll see this and it's like it's shocking sometimes how precise it is. So that's this week's Pro Traders tip and resource, and I wish you good luck and good trading.